Good afternoon, everyone. This is the Daniel Mesrobian Experience. I am yours truly, Daniel Mesrobian, your associate broker with eXp Elite Builders. This is a podcast we're going to be doing to really help the public understand and know and just gain some knowledge on real estate, everything real estate related. The questions we get all the time, how's the market doing? How's my local market doing? Is it a good time to buy? Things of that nature. And we're going to be answering all those questions. I'll go into a little bit of myself, my background, how I got here, which is amazing in itself. And, hey, why would somebody like you want to listen to this? What kind of content I'm going to be giving, and how this will benefit you as a consumer, as a client, as a friend, as a colleague, how this information can help you with regards to purchasing real estate, selling real estate, and really just at the end of the day, I mean, why do we all do it? Generally, we're trying to do it to create generational wealth. And I have had the good fortune over a number of years to help people do that. And the reward that comes with that is, it just can't be put into words, the level of gratitude I have. So we'll talk about that as well when we get into why we do what we do as far as real estate, how it's going to benefit you, what position you're in, what your motivation is with regards to why you're selling, why you're buying, things of that nature. So first and foremost, so we'll talk about me. I am, again, Daniel Mesrobian. I am an associate broker with eXp Elite Builders. I've been in this industry right out of college since 1999. I took a job. I actually was a history major in college in New Jersey at Montclair State, and took a job with a mortgage company, in 1999, right out, Champion Mortgage. A lot of you people might remember them. When your bank says no, Champion says yes. And the great company, man, I really appreciated a lot of the relationships I built there. Joe Goryeb, who was the owner, literally his office was right across from my desk, and got to know him a little bit, him and his family. Great family. And then from there, I went to, so at Champion, basically what I did was I learned everything there was to know about mortgages. I didn't know a thing about it. My college major was history, if you can believe that. I was going to come out and teach. And once I got done with college, which was a very, very hard struggle for me, it took me 5.5 years to get a 4-year degree. So picture that. Was on academic probation twice. The dean actually put me in his office and said, "Do you even want to be here? Like, why are you here? You're failing miserably." And I just at that point I just kind of buckled down and said, "No, I know I need to get a degree for something," and finally graduated in 1999. And they must have sent my resume to Champion Mortgage, because they called me and said, when I came in for the interview, they hired me on the spot and said, I said to them, "Listen, I don't even know what a mortgage is." And they said, "Don't worry about it. We'll teach you." They did. And 3.5 weeks later, I knew everything I needed to know about what a mortgage was, how they are originated. And then I closed them, originated them, underwrote them, and also funded them. So, but the funnest, Danism, the most fun part of the mortgage part was underwriting them, because everybody has a story, and as an underwriter, you're trying to find out why. Number one, why someone's credit is what it is. Number two, why there are gaps in employment, why their credit is low, why their credit is good. Things of that nature. So the detective work I really appreciated and enjoyed. So that gave me a great background on it. And that helps me a lot right now when it comes to helping a client, somebody looking to purchase, and they don't know how much they need to put down. They don't know, if their credit's going to be in the top tier, middle tier, low tier, things like that. So I can help guide them, and this background that I have has really helped me with that. So from Champion, I went to a company in West Orange, mortgage lender, where I actually met my lender right now. Good gentleman of mine, good friend of mine named Dave Sachi. I met at a lender in West Orange. We worked together there. Some crazy stories we can, about that experience. And then from there, I went to Johnson & Johnson's credit union, underwrote the loans there for the credit union members. From there, I went to Franklin Credit, which was in Tribeca. I worked in Tribeca for about 2.5 years. And then from Tribeca, that was secondary market. So let's take a step back. So let's go to 2008, when the mortgage crash hit. The biggest issue with that was loans that were being sold on the secondary market. So picture 1,000 mortgages from homeowners. They get pooled into this large pool of securities, and then those securities are then rated by rating agencies like Moody's and agencies like that. They put a number on, or a grade on it, A paper, A minus paper, B plus paper. The more risky the loans are, the lower the grade. And then because of that, the profit on selling those is higher because the risk is higher. So you're getting them at a discount. Well, they leveraged. So say, for example, this one pool of 1,000 mortgages is, I don't know, they borrowed $1,000 against that. Well, the problem was they leveraged that like 30 times over. So instead of, if that pool fails, you're out $1,000. If the pool fails, and by fails it means it defaults and those people they can't pay their mortgage. If that pool fails, it's not $1,000 that is lost. It's $30,000 that's lost. And it's not worth $30,000. It's worth $1,000. So that's a little bit of a small background of what happened in 2008 when all those companies went belly up. So I was involved in that as far as grading out mortgage pools when I was at Franklin Credit. And then from there, I went to Interthinks in the late 2000s to do fraud investigations for a lot of these lenders that were putting together loans they shouldn't have. Kind of like The Big Short, if you ever saw the movie The Big Short with Steve Carell and Christian Bale. God, it was a phenomenal movie. And when they break kayfabe in that movie and explain to you as the consumer what they're talking about, credit default swaps and collateralized debt obligations, somebody who's not in that industry wouldn't know what that is. So they did a great job with explaining that movie. So that's basically my journey. And then when I was at Interthinks, I ran into a friend, sidebar. I was doing acting at the time too, and I was in the city bartending. And this was around, I want to say 2009, 10, 11, in that area. And I was doing an overnight shoot in a courthouse in Queens because we had to rent the courthouse out when it wasn't open, which was overnight. And it was this insane scene with, it was a bondage scene in the movie. And I ran into my friend, and he was there and said, "You should get your real estate license if you're going to be pursuing an acting career." And I never thought about it. And then I ran into him about another year later. I didn't get it. And he said, "You're nuts." And then running into him again for the second time was the straw that broke it. And I said, "You know what? I'm just going to go and get it." My friend said, who was an actor at the time, just said, "Hey, you should get your real estate license because if you're going to be going on auditions, when you're not working as far as acting goes or doing any kind of print work, you have a lot of downtime. So you can go and, help people and practice real estate. So, help buyers, help sellers." And it never dawned on me like that because always in my head, I was like, no, I'm like, my acting career is going to take off. And, I just have the utmost respect for those actors that you see on TV because it is grinding work to, get yourself out there. Even as a real estate agent, it's the same. It really is. It's just getting yourself consistent with what you do every day, and the opportunities will come to you. So that's why I ended up getting my real estate license, and then it just morphed from there. I became very successful at it, but I also was in proximity to a lot of people that have helped me over the years. I always say there's never any rich hermits. So people that are there that are very successful themselves, you'll find that a lot of them like to actually help and share their knowledge and wisdom with others that are beginning. So that was my experience with them. So, but yeah, the acting and stuff that's for another day. So now we'll kind of foray into like, why listen to me? Like what is my purpose here of starting a podcast and talking to the public? And really, it's just I am so grateful for the people that I've helped and the knowledge that I have. I just want to share it with you in hopes that you, as the person listening, can take this information and say to yourselves, all right, now I'm armed with something more than I had before to make a really good decision about whether this piece of real estate's a good one to buy, whether, I should rent here, I should buy here, I should sell if you're looking to maybe upsize, or maybe you want to downsize. Your kids are out of college, or, a 5-bedroom house is just too big for you. Whatever the case may be, this podcast is going to be all about that, all about real estate, the market, buying, selling, really anything to help you maximize your experience with it, whatever you're looking to accomplish. Everybody has a different motivation to why they're doing what they're doing. And I run into that every day when I talk to clients and new prospective clients. Mr. and Mrs. Seller, I noticed your home's on the market, it was on the market. It didn't sell, but it looks like it's in a, great location. Looks like it's in great, good condition. Share with me, was there a particular reason you were even looking to sell it in the first place? And now you're going to get into why somebody is doing what they're doing. And that's the most important thing. It's not anything else as to they had a goal. The goal wasn't achieved. Okay, why not? What happened? And then what we can do if their expectations are something we can achieve, how we can help them actually get that. So that's what we're always looking for, is why someone's doing what they're doing. We all have reasons. So how is this podcast going to benefit you as the listener? Look, we all love real estate. It's something we always talk about whenever I am out anywhere. Doesn't matter where I'm at, supermarket, out to eat, with friends, with colleagues, you get the same questions. How's the market doing? How's my local market doing? And is it a good time to buy? You always will get that. So in one way or another, everybody here is involved in it, whether you own or you rent, or, it doesn't matter if you're living with your parents. And I've had the unique pleasure of living with my folks twice, once as a youth, and unfortunately, or fortunately, if you look at life as, a series of results of our choices, I had to move in with them once more when I was in my mid-30s, because that's a story for a whole another day. But my journey of where I'm at to, from where I was to where I'm at is, I just laugh sometimes. I feel like I shouldn't be here. My life should have gone in a whole different direction, but I just happen to be grateful. Not even happen to be grateful, but let me rephrase that. I am supremely grateful that I got into proximity with the people that I got into proximity with. So they helped me get to where I'm at. And that part of my life where I had to move home with my mother and father in your mid-30s as a male around here was, to say the least, not easy, and a huge hit to the male ego. So, but again, another story for another day. We're gonna talk about how we create generational wealth. I mean, real estate is one of the only things, like one of the only bastions in like this country where you can buy something at a lower price here and experience appreciation, and then sell it at a much higher number and actualize that gain. Stocks are probably the only other thing you can do that with. So stocks in the real estate market, like I don't know any other thing you can do that you buy it here at a lower number, sell it here at a higher number, and you can keep doing that over and over again if you know how to work the cycles. So I'll help you, and I've helped people do that. I'll help you get the knowledge you can to create that generational wealth, because I've been doing it for clients for Lord knows how long. 11, 12 years now? So, yeah. So now let's get into some content. Let's get into it. Where we are now. Where are we now? A seller's market, a buyer's market. We used to be in a seller's market, and for, I don't know, I probably would say when the market bottomed out and started to make its rise after the 2008 incident, probably 2010 maybe, beginning to middle 2010, 2011, you started to see some rising, because it bottomed out, and then how the cycles go is it'll bottom out, then it'll plateau, and then off that plateau, it'll start to come up. So I think around 2011 is when it started to do that. So from 2010, 2011 to now, you're looking at about 10, 11 years. Real estate generally runs in 7 to 10 year cycles. So knowing that, then the pandemic, with this pandemic really kind of threw things for a loop, because I don't know if the frenzy that we've seen in the market with sellers and buyers and people wanting to move and get out of the city and get out of urban areas, I don't think anybody could have predicted that. So that, for the last couple of years, has been a seller's market. God bless the sellers that took advantage of it and realized the gain, because I have never seen anything like it. I don't know that anybody alive has, but that was then. We are in a much, much different market now. This is a definite market where you are seeing, instead of multiple offers, you put a property on the market and you price it, where properties are trading, you're getting, 8, 9, 10 offers. Now, that price the market that's trading at that specific number, we are seeing like high levels of downward pressure in the market from factors like inflation, factors like the interest rate market going up from 3 to 8 in one calendar year. We'll talk about that in a little bit. Things like that, the supply chain problems, this all contributed to the market doing a complete 180, huge 180. And literally this year is when it started. We're going to go over some numbers as far as what the 30-year note is trading at, and the 30-year fixed mortgage. So real quickly, the 30-year fixed mortgage is generally based on the 10-year Treasury rate. So they're tied to that rate. So again, I'll say that again. The fixed rate mortgages, 30-year fixed, 15-year fixed, 20-year fixed, they're all tied to that 10-year Treasury rate. So when you see that go up, fixed mortgage rates usually do the same. Okay? So in January of 2021, this is a good way to know if you want to follow indexes to see where rates are going to go. In January of 2021, the 10-year Treasury rate was 0.91%, not even 1%. January of 2021. So you could get a mortgage. I mean, I remember at that time, you could probably, you 30-year fixed, 20% down. Your credits, your FICO's over 700. You have good assets. You are looking at, 2 7/8 for a mortgage, sometimes 2.5. The 10-year Treasury rate was 0.9%. October of 2021. So still in the middle of the pandemic, but now 10 months later, you're at 1.46. Okay. February of this year, 2.02. May of this year, 3.12. And now we're at 3.87%. So That Treasury rate, if you were following that in January of 2021 to now, you basically knew and could base your decisions of what you want to do based on that Treasury rate. So that's a good indicator of where the fixed rate mortgages are going to go. Now, the interest rates, as far as what's being offered to you, beginning of the year, you're looking at like 3%. Some cases you might be able to get a little lower than that, but usually it's around 3%. At the end of this year, we're going to be, right now you're 30-year fixed, 20% down, FICO's over 700, and by FICO I mean your credit score. You're getting like 7.25%, 7 3/8, 7 1/8. The Fed just raised the rate, the federal funds rate, another 0.75%, which they haven't done that many 3/4 bips, BPSs, 3/4 bips ever. And now they're doing them with regularity. Now in December, they're talking about only doing it 0.5%, because today we got news that the Dow is up, or I think it's 800 points. It's up, and that's because the CPI, the Consumer Price Index, came in with some favorable news. So let me say that again. The Dow today is up almost 800 points because the CPI, Consumer Price Index, gave some favorable news that it was lower than expected. So now let's go back to the Fed funds rate. Now, this is the rate that banks lend each other, okay? So the rate that banks in the United States lend to each other is the Fed funds rate. So by raising interest rates, the Fed makes it costlier, more expensive to take out a loan, which I'm sure you guys are all seeing now. So the Fed funds rate in the beginning of the year was obviously much less than it is now. So what happens when that happens? What happens when the rates go up and the Fed raises the overnight lending rate that these banks can lend to each other? What happens with that? It basically will cause people to borrow and spend less money because money's more expensive. So it's kind of like, if you can visualize, like the Fed is pulling the brakes. Like, remember those old trains, those old like locomotives? And when they needed to stop, this engineer just like pulled this huge brake back and tried to stop the train. That's what the Fed is doing to the economy. They are trying to pull the brakes on the economy by slowing it down. How do you do that? You raise the amount of raise the interest rates so money is more expensive. Now the good that comes with that is that it's better to earn. So you're going to get a better rate at your bank, or an investment account, because that's based on, these rates, because now money's more expensive. So you'll get a better, earning rate. But if you're going to borrow money, it's more expensive. So that's the downside. When rates are lower, it's a better time to borrow, but not a good time to earn. So I want to reiterate that point one more time about interest rates and borrowing and earning. So think about it like this. When rates go up, okay, they're going up. You have a high interest rate, 7, 8%, which is where we're at now. When rates are high, it is a great time. If you have cash or money in the bank, you're going to get a better rate on that, 3%, 4% on a savings account. Look, remember the days when you were getting 0.5 and 0.7% on a savings account? Like, it was nothing, but it was a great time to borrow. So if you were going to buy a home or refinance a home, that was the perfect time to do it. Okay. So high rates are the time to earn is better. Time to borrow, you're going to pay a higher rate for it. So I'm going to share an opinion on where we are at right now with the rates where they are and the question of, should I buy a home? Back in 2020 and 2021, when I was working with clients, the biggest complaint I had from buyers was, I can't buy the house. I can't get it. I keep getting outbid. There's 15 offers on this property and I can't get it. Well, why is that? Let's talk about why that happened. So that happened because almost everyone could afford a mortgage. So even with 3% down, 5% down, you had everybody putting these offers in, no contingencies, things of that nature. So the competition to purchase was so high because so many people could do it because the rates were so low. Everyone thought this was a great time to buy. And they were right. It is. I mean, it's a good time. And for the sellers, it was a perfect time. Think about it this way now. Now rates are higher, okay? Everybody is pulling back, just like the government wants. They are pulling that lever back and saying, we need the economy to slow down. And Powell even, look, your Fed chairman, Powell even said, like, real estate's going to be affected by this, and we need to basically rein it in. He didn't use those words, but he's trying to slow down the real estate train, which we know. So now, yes, your rates are higher, but there's eminently less competition for the home that you want to buy. Is it more expensive to purchase it? Yes. So if the payment is within reason and you can comfortably afford it, that is one thing that I will never do. Is I'm not going to put anybody in a position to where they are stretched financially to purchase a home. We will look at, because I have a mortgage background, I can go through this with you as an associate broker. I'll go through this with you as your agent or broker. What can you comfortably afford? Okay. And then whatever you can comfortably afford, if buying that home at a higher rate means you can, I'm saying purchase the house. You may have somebody else in competition with you, one other. But right now, very little people are buying because of the rate market. So grab that home. And then in 2 years, 3 years, because we know with certainty when inflation's going to come down, because this is what they're trying to do. The government is trying to rein in the economy. So those inflation numbers that are 8, 9, 10% now, which doesn't even include housing. Those inflation numbers don't include housing. So when those come down to those normal levels they want, normal, 2%, 3%, rates are going to come back down too. Just refinance it. You can just refinance your home. But you own it now. You got it. You already have the asset, so to speak. Whereas before, you couldn't even buy it because you were getting outbid by $50, $60, $70, $100,000 by these buyers that really wanted it and that could afford it. Now that rates are higher, now you can afford it. If the payment is something that you can comfortably deal with. I will always preface this opinion with that. I don't ever want to put somebody in a position where they are stretching themselves financially. Look at it this way. All right, so lenders will look at what's called the debt ratio, okay? So I'm going off the cuff here a little bit. So a debt ratio is this. There's 2 debt ratios that a lender is going to look at. They're going to look at your overall debt ratio, which is the money you have coming in versus the money you pay out to bills, okay? So they're going to look at the overall debt ratio. And then they're going to look at your housing debt ratio, okay? So there's 2 of them. Your housing debt ratio, comfortably, if you're spending any more than, I'd say like 35 cents on the dollar. So for every dollar that you earn, they don't like if you're going to be spending more than 35 to 40 cents of it on housing. And by housing, I mean mortgage payment, taxes, insurance, and if you're buying a condo, HOA fees, okay? So they're going to focus on that. Then your overall debt ratio, which is all of your bills. And by bills, I mean car payments, student loans, credit cards, personal loans, things of that nature, or other mortgages you have. That's basically what they're going to be looking at. Now, that ratio, if you're spending any more than I'd say probably 50 cents of every dollar on that, now you can push above that a little bit if the underwriter of the lender knows that maybe a payment's going to be coming off your books soon. Whereas like you own a car and you have like 6 payments left. Well, after that 6 payments, maybe that's $600 a month. Now you have that for your, in your pocket. They'll look at that and say to themselves, well, this person is going to be in a better position maybe in 6 or 8 months. So we'll overlook that payment because it's coming off. So this is what a lender is going to do when they're looking at your scenario as far as how much they're going to pre-qualify you and pre-approve you to purchase. So just again, I'll encourage, if you, and again, this goes back to motivation. Why are you looking to purchase? Are you looking to start a family and you want to get out of the apartment you're living in? Are you your job's relocating and you have to sell, or you're buying in another area? We'll focus this part on buyers for now. So if you're looking to maybe you're the home, just you want to get into a different area, you don't want to be in the area you're in now. You're in the city and you want to get out to the burbs. Whatever the case is, this is what a lender is going to look at as far as how to pre-qualify you. And then from a seller perspective, it's the same thing. Your motivation to do it is it's always there. There's always going to be someone who, job relocation, maybe a job loss, unfortunately, and they have to sell. They're retiring, and they want to, maybe rent, maybe go to I just ran into a gentleman today, wants to go to an over 55 community. He doesn't want to live in a 3-bedroom home on a main road in a town in Essex County. So we're going to help him out with that. So again, it's whatever your motivation is, but the time that we are in right now, I feel, is great for the buyer who doesn't want competition for the home he's going to purchase or she's going to purchase. They just want to get it. They have the need and they have the means. And then once you get the home, now you own it. And here's something else to think about. Okay. So when you purchase a home, there's 3 things that you're going to experience when you purchase it that it's going to build equity there. Number 1 is you're going to experience equity, just the appreciation of owning the home. It appreciates over time. Number 2 is you're going to get the principal reduction of buying, when you pay down your mortgage, now the principal of the mortgage is going down and you're getting that principal reduction. So that adds equity to the home. And then number 3 is you've achieved the goal of buying the home for whatever reason you needed to. Quality of life goes up when you have a need and you meet the need. So if you're say your wife is pregnant and you need a home that has, a nursery, guest room and nursery. You're living in a 1-bedroom or 2-bedroom in the city. You need to, upsize to, say, a 3-bedroom home in the suburbs or somewhere close to where you're living. That's a need that is a need. So purchasing the home along with the other 2, the equity appreciation and the principal reduction, now you've achieved the need that you got of the need of buying the home, your motivation. And because you've experienced that, your quality of life raises. So let me say that again. Because you've achieved the need of what your motivation is, your quality of life will increase. It always, always will. So those are just some things to think about when someone asks me, hey, Dan, this is a great time to buy. I know that rates are high. And look, guys, let me say this too. None of us remember when interest rates were 15, 16% in the early 80s. I was, 5, 6 when they were. So it's because I don't remember it doesn't mean it didn't happen. It happened. Interest rates were 15 to 16% at that time, and people were still buying homes. Why? Because they had a need. Again, so with that said, as far as, talking about this time and where we are is in the market, we have these factors going on that are, causing interest rates to go high. And one of them, I'm sure everybody hears the term inflation. Yes, inflation's, 8%, it's 10%. And, we hear it every day. And it's really to get into and dive into inflation, it's probably a discussion for another day. But, since I brought it up, I will say that there are, from what I've, the research that we've done in the industry, there are generally 3 factors that influence inflation. Number 1 is production costs. Number 2 is demand. and number three is our country's fiscal policy. And to just kind of touch on each one, like production costs, I'm sure you hear all the time, these, during COVID, we have supply chain problems. There's supply chain problems. So you're not able to get the items and the things that you need. So then what happens is people will pay more for them. The demand, you have increased demand because the items that you want, you're not able to get. And then our fiscal policy, which is basically our government and their monetary policy. Now, we obviously just had a pandemic, and I believe it was 2020, the government printed $3 trillion with a T, not billion with a B, trillion with a T. That's a lot of money to now to now get just thrown into the system. So they did that to counter COVID's economic impact, and to kind of so my experience with this is, and it was hard because, obviously things were shut down and the government put out some programs that said people didn't have to pay their rent. And then some of these lenders gave, mortgage forbearance, things of that nature. But from a tenant, I can give it from a tenant and a landlord perspective from what I've seen in my travels during this. And I've seen it from both sides. It was a very, very hard line to toe because there were tenants who couldn't pay their mortgage or pay their rent because they weren't working because everything was shut down. And then the problem was you had owners who had mortgages that couldn't pay them because the tenants weren't paying the rent. And it was hard because you see it from both sides. You see the tenant's perspective of, hey, I can't pay because I'm not working, because I can't work because they forced me not to work. And then you have the owner who says, well, wait a minute, I got to pay my mortgage and you're not paying rent. And so you had that kind of that back and forth. And it was a very, very hard. I still know owners to this day that have buildings where the tenants are just not paying. And I don't know if I could say COVID's over, but all of the guidelines have been eased. And unfortunately, these tenants still have not paid. And these owners don't know, they don't know what to do. So again, it was a very hard thing. I don't think anybody was ever prepared. Nobody was prepared for this. The world wasn't. But from a real estate perspective, I saw both sides of it, and I'm very empathetic to both sides of the coin. From a tenant who isn't working because they can't, because everything is shut down, to the owner who, well, hey, wait a minute, I still have a mortgage to pay here, and I'm not getting any relief. So it was hard. It was a very hard thing. So look, to wrap all this up, to say, we got to where we are now, and here's where we are. Now we are at an almost 8% interest rate. Let me say that again. We are at an almost 8% interest rate. In January, we were at 3, almost 3 or a little more. So from 3, we went from a 3% interest rate to an 8% interest rate in one calendar year. One more time. We went from a 3% interest rate to an 8% interest rate in one calendar year, almost 8. By the end of the year, it's now November, 10th or 11th, whatever it is. By the end of the year, do not be surprised if we are at 8 for someone taking out a loan. That's where we are. That's never happened in the history of this, the real estate market. It's never happened. So that is how hard the government is trying to pull that lever and rein in the economy and rein in real estate. That's how hard they're doing it. So again, so then it goes back to that question of, should I buy? Is this a good time to buy? And I will always base that answer on, what is your need? What's your need? Is your need to, are you expanding your family? Are you relocating? Unfortunately, maybe you're getting divorced, and you need to buy something else, or sell the home because you're getting divorced. Or if you're looking to sell, maybe unfortunately somebody has passed and the home needs to go through probate. We can help you out with that too. We have experience with probate, and we can do that for you too. But again, it will always go back to what is your need as the consumer and as the client. What is your need? It is my duty and my job to serve you and achieve the goals of what you're looking to accomplish to the best of my ability. And that is exactly what I will do based on the questions that I ask you in the beginning when we start to work together. So, you know, so we'll say like high rates. I look at it like okay, it's like a track. High rates, which means low demand, which means a good time for if I'm looking to buy and I don't want competition, good time. High rates, low demand. And then in a couple years when rates come back down, because we know with 100% certainty they will at some point, I don't know when, but they will, then you just refinance. But again, now you have the asset and you have the equity appreciation and you have the principal, the principal buy down, the mortgage buy down. Okay. So, but again, you own I can't stress this enough. Now you own a piece of real estate in the United States of America. You own it. You're not renting anymore. And it's not that renting is bad. Let's take a sidebar here. Renting serves a purpose, and it serves a purpose for someone who, number one, might be unsure with where they're going to be geographically. Maybe they think that, in a year or two, they're going to be living in another state. So it wouldn't make sense to purchase something. So renting does serve. Maybe your job is very transient. You're traveling all the time and you're not home to have, to upkeep the home. Renting is perfect for you. It's perfect. So renting is not, I know there's a perceived notion that, renting is you're paying your owner's mortgage. Well, yeah, you are, but you're also able to achieve the goals you have for your own life because owning a home isn't optimal for you. So just keep that in mind. I would stress that. Look, it's like learning. It's like education. Every child doesn't learn the same way. I sure as heck know I didn't. There are like eminently smarter people that were in my classes than me. It took me 5.5 years to get a 4-year degree. Like, come on. I don't learn very quickly scholastically. That just isn't my forte. Can I work hard and study and get decent grades? Sure. But it takes a lot more effort for me to do that than somebody else. We all don't learn differently. So I share that to say this. Everybody's situation isn't the same. And it is our job as brokers and agents to find out what you're looking to do and see if your expectations are something that I can help you achieve. And we get there by asking the right questions. I heard this a long time ago. Selling is not telling. Selling is just asking questions. Just asking questions. So, to get to that, and again, your reason for doing something is different than mine, is different than his, different than hers, different than theirs. Everybody's is different. We just have to figure out, what it is. Is it, number one, what are you looking to do? Number two, is it achievable? And number three, can I help you make it happen? That's generally what a seller's looking for. Can you help me? How quickly can you do it? And how much is it going to cost me? That's really your three questions. So just keep that in mind and think about that for all my agents and brokers out there that are thinking about, things of that nature. So again, so it goes back to just why we do what we do. Everybody has a different reason for why they're doing what they're doing. So I think to wrap that up, wrap all, the part of this podcast that is about the market. I think that, me personally, if it was something I was looking to do because I had a need to buy, I'm absolutely going to do it. I think that if your motivation is there and you can, again, I'll go right back to what I said before. If the payment is feasible for you and it is not stretching you financially, I think it is a good time to take a look and purchase a home because the competition for it, it's eminently less than it was 12 months ago, 18 months ago, 24 months ago, when everybody was just in a frenzy to get out of the urban areas and things of that nature and going to, suburban areas and rural areas. So that demand is gone. It's just gone. So now the conversations that us as brokers are having with our clients it's not, all right, hey, let's talk about the 7 offers that we have and we'll figure out which one's best for you. Now the conversation is, okay, we've been on the market now for, 2 weeks, 3 weeks, or however much time it is. And, we're just not seeing the amount of traction and offers that we had hoped, showings that we had hoped. Are we open to having a discussion about, adjusting the price? Because let's think about this. There are 2 ways to create value in the eyes of the public, in the eyes of a buyer, but also in the eyes of people that are purchasing something, anything. It's to either add something to what already exists. So if you say for a home, for example, if we have 5 homes that are in this area and they're all pretty similar, and then home number 4 that's, in the area of price of the other one adds a whole addition to the home, but, keeps the price the same, is that property going to be more attractive to a buyer? Yeah, you better believe it will. Absolutely. So the days of what we know to be true now is the days of, putting a property on the market and getting, 7, 8, 9, 10 offers in like a week or two. That market has changed. So that's the good thing for a buyer right now is you're able to actually be able to get a home that you're looking to purchase. And even for a seller, look, even if, you weren't able to get, the exact number you wanted to get 12 months ago, your need is still there to sell. We will get you the absolute most amount that a buyer is willing to pay. And again, as a broker and an agent, that is my job to do for you, and we would do that to the best of our ability. So now, having said that, we are going to pivot to the last part of our show, the last part of the show. Pivot. It always reminds me of. Did you ever see that that Friends episode when Ross just screams? He's like, "Pivot," and he screams that out. That's what we're gonna do. We're gonna pivot to the last part of the show, which is some Danism quotes. So some of you who know me, my friends always say that there are words that I use that are just Danisms. They don't even know what they mean. But I'm going to use some Danism quotes today. Some of these I've made up. Some of them I've heard over my travels and use them in my daily life. I live them. All of the time, no, but I make a concerted effort to really just to live the best I can. And these are some of the quotes that I live by. They're all a part of what makes the man that is Dan sitting in front of you. So the first one is, and this is an important one because your news media knows this. The human mind absorbs negativity 7 times more than positivity. Let me repeat that. Not because you didn't hear it, but because I want to really bring that point home. The human mind absorbs negativity 7 times more than positivity. Your news medias know that. Social media knows that. It's why you hear, if you just turn on the news and turn your back to it and you listen to it, you're going to hear a story about somebody getting shot. You're going to hear a story about, they'll tease, there's a food in your cabinet that might kill you, news at 11. And they'll tease you for that. Why? Because it gets something in, it's in your brain. It's like your frontal lobe. I forgot what I think it's in your front of your brain. But that negativity hits that part of your brain. And the news medias know that. And the human mind and the brain reacts to that. So it's like you have to be cognizant of what you are putting in your mind every day. Because now that you know this, and this isn't like my opinion, this is a fact about how the human mind works. So it can change your mood. Just hearing something and getting angry, looking at your phone and looking at something on social media that's negative, it completely affects your mood. Many of you know that are friends of mine. I've gone to numerous Tony Robbins seminars, um, and he says this a lot. What you focus on, you feel. Again, what you focus on, you feel. So if you are focused, just be cognizant of what you're focusing on. Are you focusing on the fact that somebody cut you off and now you're going to be angry for the rest of your day? Are you focusing on the news teaser that something could be in your cabinet that's going to really harm you, and they're not going to tell you for another 2 hours or however long so you have to watch it now and see what they're talking about? This is why not watching things like that is very healthy for you. Just feeding your mind things that are going to help it grow and progress and grow and progress. Those are the things that are going to, again, affect your mood, because you have to be mindful of what you put in your mind every day and really every moment. Again, because what you're, how you feel, again, is going to be determined on what you focus on. So I'll end it on that. Just be mindful of moment by moment what you're putting your attention to. Is it helping you or is it hurting you? Is it getting you to your true north, to that goal that you're looking to accomplish? Is what that thought is in your mind, is it helping you get there, or is it putting you going the other way? Think about that. And there isn't any right or wrong answer. It's just, for me, goals are important. I have them in my wallet. I keep goals there, and I look at them, periodically, just to make sure that the things I'm doing every day get me towards that true north, whatever that goal is. And am I a master at this? No, by no means. I am way more a student at this than I am a teacher. By no means am I perfect, but it is important. So that's number one. Number two, Danism. This is something that I heard in my travels from a very, very wise man once. A belief is just an idea that we develop loyalty to over time. Let me say that again. A belief is just an idea that we've developed loyalty to over time. So think about how we come to believe something. Like, let's think about that. We'll go through like your life influences. So you're at a baby, you can hold the baby in like the palm of your hands. This baby's like this ball of clay that's going to get molded. So from, 0 to probably, I don't know, 0 to 8, maybe 9, the child's primary influence is their parents. So everything that their parents, believe, fears, love, joy, all of that all goes into this child, this beautiful child. And then usually 8, 9, 10, they start to, they're going out of the house more. They're a little more mobile as far as doing their own thing. So who do their influences become? Parents, but also teachers and their friends' parents, because now you're spending time at your friend's house. And you're hearing their opinions and their beliefs on certain things, and your child brain is hearing all this, and it's absorbing it and forming opinions unconsciously in their head. And then as the child goes to, young teen, like adolescent, and primarily their influences are going to be their friends' parents, teachers, and coaches. Parents are still there, but they're spending less and less time at home and more time out. So now those influences become more. And then as you get to a young adult and an adult, you get a car, maybe you're starting college, your primary influences are professors and coaches if you're in sports, things of that nature. Your parents are, again, they're still there, but it's much, much, much less because they're spending less and less time with your mother and father. So generally around that time, your brain has formed these opinions and been told like these beliefs. You've been given all these beliefs from these influences. At some point in your life, you'll start to question, do I really believe that? I don't know. The sky's whatever. The sky's blue. Do I really believe the sky's blue? Well, my mother told me that, and my teachers told me that, and my coaches told me that, and my friends' parents believe that. So, all right, well, maybe that's true. But whatever the belief is, it doesn't matter. You're going to start to, whether maybe it could be religious beliefs. It could be, beliefs on finances. Money is the root of all evil. We'll go with that one. I love that one. It's not the money. The money is not the root of all evil. The love of money is the root of all evil. But not money itself. Money is very static. But imagine somebody says that to a young child. Money is the root of all evil. And they go through their life believing that money is the root of all evil when we know it's not. So at some point, that child or that adult will ask themselves, hopefully, do I really believe that money is the root of all evil? And if they have an open mind, will start to question that and start to come up with maybe their own. So you have to basically unlearn a belief to relearn a different belief. It's like you have to unlearn and then relearn. So that's why, you can take a kid and teach them like 4 or 5 languages when they're young because they don't know that they can't do it. They're not told they can't do it. They can do it. We as adults just think, I can't learn 2 languages or 3 languages now. You can, it'll take a lot longer, but a child's brain can take in, it's like this magnet of it can take in anything. So a child can learn multiple languages and learn them well when they're young. So you think about that. You don't have to unlearn something to then relearn it. You're getting it fresh. So I hope I've made that analogy, where you can understand it. But so what I'm saying is for a belief, you have to unlearn a belief to relearn a new belief. And again, this is how we come to believe things. So, as an adult, or at some time in your life, I had that experience where things were told to me when I was young. And then as I started to get into my early mid-20s, late 20s, really asking myself in my brain, in my head, and in my heart of hearts, do I really believe that? So that's number 2, is a belief is just an idea that you or I or anybody has developed loyalty to over time. Okay? And the number 3 Danism, like rules of life, things that I do my best to practice, is incremental change over time creates something magical. Let me say that again. Incremental change over time creates something magical. And it can be in any facet of your life. Physical, spiritual, mental, emotional, financial, in any facet. That incremental change over time it creates something so magical because I was, when I go to the gym, I saw this once. It said in 4 weeks, you'll see results of your body changing. In 8 weeks, your family sees results. And then in 12 weeks, like the public will see results. So in 1 month, I'll see it. 2 months, my family will see it. 3 months, the public will see it. So that's something like physical. Like a financial goal would be a great one. Like, oh, God. I mean, I know this, and this is something I learned at Tony's seminar too. We overestimate what we can do in a year, but we grossly underestimate what we can do in a decade. Grossly. Because we look at it as it's too long. But if you do the same, God, persistence gets it, consistency keeps it. If you are persistent at whatever goal you want, every day you do something, you don't have to be perfect, but if you do something to get towards that goal, just one thing every day, you're growing towards it. Like, think about a tree, like a tree or a leaf of grass. If a tree or a leaf of grass is not growing, it's dying. The minute it stops growing, it's dying. Like that's us. We're 70% water and 30% dirt. So like we're made of the same things. I'm sure we've all been to, funerals, and I have my fair share of them. When you see the body that's sitting there, it's the spirit's gone. It's just this body that's there, this physical form. There's no life to it. The spirit is what gives it life. And if that spirit is not growing, like you can generally you can tell and see somebody when they're, out and they've just kind of like thrown in a towel and like life is just too much. You can see that. And I'll say, going back to what we can do in a year, we overestimate what we can do in a year because we have sometimes we'll make these really crazy lofty goals that just aren't realistic. How would I say this? I would share it like this: set the goal, write it down, and then keep it with you. Keep that goal with you and look at it over time. And again, are you doing something every day to get closer to that goal? And because look, like these papers, this hat, like everything here has energy to it. My wallet, now in my wallet right here, there are goals that I have. Those goals are now like with me. Like there's an energy to that. Everything here is just energy. So what would it hurt not to do it? It's not going to cost you anything to not to do it, but to not do it will cost you everything. So think about that. So incremental change. I mean, I'll give you a quick example of me, and then we'll close out the show. I had for years and years and years when I was younger. I'm very athletic, so go to the gym, I run, I bike, yoga, all that good stuff, and then I had my lower back, a disc moved, and ever since then, I've always had so I had to be careful with my back. So I had a friend of mine said something very funny. He said, man, when you have a back problem, that is a subscription. That is not a one and done. You don't just fix it and then you're done. You're subscribing. Now, I don't want to say I believe that. I will say that it has been a journey. So as recently as year and a half to 2 years, about 2 years ago, it got really bad to where I couldn't even do it. I was literally like laying in bed, like in the fetal position because I was in so much pain. And when I tell you I've read books, I've gone to chiropractors, I was doing everything that I could do to figure out what was wrong. And I felt like at that point when I was at my lowest that my body was just going to fail me and it just wasn't going to, I wasn't going to be able to do anything anymore. No more soccer, no more running, all of these things that I love doing so much, I couldn't do. And I was okay with it, but I said to myself, did I do absolutely everything that I could to try and figure this out? And I always felt like there was something more I could do. For reasons I don't know, like by the grace of God, I got into proximity with a gentleman that I met at a Tony Robbins conference in 2018, a man named Pete. He wrote a book about being in pain and how to cure yourself of it because your body, which I didn't know, what causes it is an imbalance in your body. Your body's just imbalanced. You have to get your body back into balance. He has exercises you can do for it. I've done them for the last year. I haven't had any problems. And I'm back to yoga and biking and running and all those good things that, a healthy body does and a body that's able to do them does. So I share that with you to say, prior to these issues, I was in like literally the best shape of my life. Just very little, very, very lean muscle, defined, things like that. And it has changed. My body has changed when my back did not allow me to work out. But the incremental change now of watching my body respond to exercise and, just getting it right with food it truly is amazing. So This works with anything. Incremental change over time just creates something truly magical. And again, whether it's financial, you have a financial goal, you want to make $1 million in a year, shoot, put that as a realistic goal for you, and working hard at what you're doing. It's totally achievable, 100%. Write that down, look at that, and do everything you can each day to get towards that goal. Everything you say yes to, or everything you say yes to, is something else you may be saying no to. So think about that. Like, if you say yes to going out, to a late dinner with friends on a Friday night, and some alcohol is involved, you're going to basically say no to a very productive early Saturday morning. So, and that's just like a quick example. So usually, like, with certainty, everything you say yes to is something else you're going to say no to. If you say yes to staying home and studying, or, working on a side hustle business to get you that $1 million, you're saying no to going out with your friends and drinking and having a good time. What is your true north? What's more important to you? Those are the questions that you ask in your mind, and the decisions that you make will either get you closer to that goal or farther away from that goal. And again, I say this, I am not perfect. I've made bad decisions too. Believe me, I have. So we could go into that in another show, in another episode, of some of the horrible decisions I've made with money, with relationships, with, decisions physically, like emotionally. Yeah, those are for a whole nother day. But I just wanted to share that with you. Again, the incremental change and just creating something truly magical over time. So I want to bring this to a close. Thank you, everybody, for following and listening to this podcast. It is a true pleasure and an honor to serve you and share with you some knowledge that I have, in hopes that it can create generational wealth, if that's what your goal is. Just some knowledge if you're thinking about going and purchasing a home, or just some things on life, and maybe you're having a hard time, and maybe something I shared with you can maybe get you on the back on the good road. So if that was my purpose here today, I'm supremely grateful to have done that. So listen, you can find me on YouTube, TikTok, Facebook, Instagram, all the social medias, at Daniel Mesrobian, or you can on my YouTube channel, it's the Mesrobian Team, and give us a follow, give us a subscribe, and we're going to have some really great content for you. So if you are in the market and looking to sell your home, maybe get a realistic picture of what you can expect to receive on the open market, you can reach out to me directly. My name is Daniel Mesrobian. I'm with eXp Realty. I am an associate broker. Myself and my team will be more than happy to serve you with whatever your needs are. Again, whether it's to sell or to buy, you can reach out to us at our website, which is www.soldinNewJersey.com. You can also reach out to me on Instagram, which is at Daniel Mesrobian, TikTok, or you can email us at themesrobianteam@gmail.com, and also our YouTube channel, which is the Mesrobian Team. Any one of those platforms, we'll be more than happy to help serve you. And I love feedback. If you guys have some feedback for me, positive or negative, I just encourage you to write and let me know what you thought. I'm trying to, authenticity is really important to me, to just be, as authentic as I can, because, I always say, like you can't bullshit a bullshitter. Most of you out there, like, you know when someone's being honest and not. So any honest feedback I would really appreciate. So until next time, be well and love your life. Thank you.